Hey everyone, welcome, welcome. All right, happy Friday's Eve. You got it. Yeah, and please be sure to smash that like button early. We really appreciate it. All right, just gonna wait a second, just about a minute, and then we'll get started. Hopefully, everyone's having a great day. Before we jump into that, let me just take a look here at the markets to give you a quick update. So, currently, the QQQ ETF is up 0.05%. Okay. So not too much of a change from yesterday. Now, of course, we've had a lot of volatility lately with tweets that were posts, I guess you could say, on Truth Social and also on X. I guess we can't technically call it a tweet anymore since it's no longer called Twitter, but you get the point. Um, we have seen some posts by the president about different issues with trade, particular with China, that have been affecting the markets quite substantially. Also, comments from the Fed, the FOMC seems to be suggesting that we might get another rate cut this year, which I don't think most of us were expecting. So, yeah, X weeks. Yeah, there you go. Actually, I like that one, Al. I'm going to use that. So, basically, folks, there are a lot of things that have kind of shifted substantially. And of course, we saw earlier in this year how much the trade, the tariffs had affected the markets. Now, of course, as always, everything is in flux. There's always going to be some things that will happen and some things that won't. So the only thing you can count on right now is that there's going to be movement, there's going to be volatility, which is not a bad thing if you know what you're doing, or at least if you can get a good lead on, a movement in the markets. Now, today we're going to be talking, of course, proprietary trading. So I'll talk about some of the tactics that we use to be able to exploit these things. All right, before I jump into that, please be sure, hold on for a second. Please be sure to smash that like button and subscribe before we forget. Please be sure to smash the like button and subscribe before we forget. Okay. Love to see you guys following us on social media. All right. Now, again, my name is Michael Patton. Just a quick, brief background about myself so you know who I am. I started my career as a commodities broker thank you, Kevin, back in 2005. Now I was in commodities and I was focusing on commodities options. And then after that, basically all I was doing was trading on behalf of clients, which was really cool to start your career actually trading, which is not always the way it works. After that point, I became an educator at Prosper Trading Academy. I focused on stock options primarily, but also I did biotech stocks later. Then also I became a proprietary trader at Global Prime Trader in the Cayman Islands. I wasn't staying in the Cayman Islands. I was trading remotely, and also Great Point Capital, which is located in Chicago. That's actually one of the biggest prop firms out there. Now I live in Miami right now, but Global Prime actually changed their name, but they have a new office down in Brickell, in the Brickell section of Miami. So as of right now, I currently trade with a group of professionals. Also, I am the head coach at Funder Trading, which is a proprietary trading firm, which we'll talk about later. All right. Now, having said that, right, the markets, I know you can't see this text, but they're under pressure. Okay. I think the text didn't come out correctly here, but the markets are under pressure. And what I mean by that is if you look at things, you have a lot of volatility out there. Matter of fact, let me pull up a chart and let's take a look at what we can see. So I'm going to superimpose this on top and let's jump right in here to the QQQ. Now, this is a short-term view. You're looking at a 1-minute chart. But what I want to emphasize is that if we look at the action over the last several days, it's anything but consistently bearish or bullish. It's all over the place, right? So you had this big gap down off of the last tweet. Then you have the recovery. Then you have this is the second drop down. Then it recovered. So the tweet was actually before then. Sorry, let me go to a longer time frame chart so you can see it. So, okay, there's the big drop, right? Then we recoup. Then we drop again. Then we recoup. So we still haven't gotten back to the highs of the year, but the action is pretty wild. By the way, these DOs and DCs, they're just the days open, the days close. So it's just showing the opening and closing prices, which, by the way, are the most important prices that we pay attention to as prop traders, as intraday traders, simply because those are the prices that count the most. So I always have those displayed on my chart so I can see multiple days of opens and closes. So I have a sense of where the market might trade. So, for example, we look today, just as a quick, simple example. Here you have the market open here. Okay, this DO's today's open, goes up, then sells off very sharply, and it goes down to the close, the previous day's close, which was right here. Okay, then it goes below that all the way down to the close 2 days ago, back to this range. Then we bounce back up. So this is kind of the type of action that you would expect to see, that these levels become extremely important, especially at times of volatility. They're going back and forth to places where the markets are showing, where they want to start or finish. That's all. Okay. So that's what we're looking at. Now, earlier today, it looked like we were going to get some soft action, but as I mentioned in the coaching room, if some volume kicks in, we'll probably see the market go down sharper, at least to the previous session's close, which was right there. But obviously, we were coming back to those lows once again. And once again, we're finding buyers consistently coming in down there. So that's a few days in a row, right? So the market doesn't look bearish, okay? One of the things that I think a lot of people are focusing too much on the short term and not seeing the bigger picture. This is what the bigger picture actually looks like. So while that was a very violent move down that wiped out approximately 2 weeks of gains, we do have a pretty sharp rebound right there. Okay, so we can look at the price bars and see that the price bars are pretty wide. Let me turn off the study for a second so it's easier to see. So if we look at the price bars, the ranges are pretty wide, but that's good, because I remember back in the 2010s where you would look at the markets. For example, if you looked at the futures markets, the ES futures, which is the E-mini S&P futures, you would see probably a 5 point to 50, 5 to 8 point trading range every single day, which is really tiny. Okay, these days we're going, 50 points, 80 points, 100 points in a day. But back then, it was a lot smaller. So it's harder to trade, much harder to trade. So range is good. We like range. Range means that we can do something. We can actually potentially make some money. But obviously, we also like to have some consistency too. So right now, I would say the volatility is working out fairly well as far as creating opportunities. But at the same time, this day, like for example, we were definitely shorting because everything was falling apart. So that proved to be a great opportunity. But we're going to go over in a second some of the ways that we can effectively do that. All right. So the chop sometimes is a problem intraday. And today was definitely a choppy day, no question about it. But in general, we are getting some decent moves. So things are not looking too bad as far as the intraday trading environment is concerned. And we'll see what happens next. But let's move on. So you now know the markets are under pressure. I don't have to tell you that. But let's take a look at some of the stocks that I've been watching recently. Okay. Now, one of the stocks that's been on my radar, is Arista, which symbol is ANET, NVIDIA, American Eagle Outfitters, and AMD. All four of these stocks have had substantial movements. All four of these stocks have come up on our radar and have presented intraday trading opportunities. So recently, let's go ahead and look at some of them and see what's been happening. So first up, I'm going to bring up in order ANET, which is Arista. Okay, then you can see today's action was nothing good. I mean, it's just choppy. There's really nothing to trade here. And this is, whenever I see a chart that starts like this, where it's just chopping back and forth, I have the VWAP one here. That's the dark purple line. If that's what I'm seeing, then I already know this is probably not good. This is a 1 minute chart right here, Kevin, on the screen. And the previous day, not much there either, just a little bit of upward momentum. We've had some other days where there was some better movement. So the last several days have been pretty choppy, but here's a good example of some better movement right there. That, of course, was during the sell off. But you can see clearly this had a really big move down and then it followed through later on, which made for some good opportunities. So this stock has been pretty sensitive. There's definitely somewhat of a cult following for this stock. Okay. It is definitely, in my opinion, in the status of a meme stock. It's not the most significant one, but you do have that battle between people who are betting against it, short sellers, versus people who are extremely bullish for the stock. So that creates a lot of movement. So this is a stock you definitely want to keep an eye on because little bits of news here and there can move it. And if you look at the chart of the stock over the last, year or so, I mean, this has been a big mover. I'm looking at a weekly chart here. Okay, so this is going back several years, but you can kind of see what type of price movement. I'm sorry, I was skipping the American Eagle. Sorry, not ANET's not a meme stock. Sorry, I was thinking about American Eagle. ANET, the movement we've been seeing with this, is based on the fact that there's that downward movement was mostly due to expectations of competition from NVIDIA in their space. So we've definitely seen a lot of movement in the stock, and I do think we're going to see more. So this one, just bullish, strong upside potential, strong upside projections. We've seen some really good movement, so we can continue to watch this. So again, sorry, I was crossing American Eagle in my head with ANET, my mistake. But anyway, that's what we have there. Now, looking at the next stock, which of course is NVIDIA. Some people say NVIDIA, this depends on you, but NVIDIA also a stock that's been moving a lot. Okay, you can see that a lot of these days you have some pretty strong price movement. Okay, yesterday we did have some pretty substantial trending movement on the stock in the downward direction. Now, of course, we can exploit long or short. So therefore, any movement can be good. There was another day where at the beginning of the session, we had very strong downward movement. Making for a great opportunity for us to do a trade. 1 second here. So this stock, NVIDIA, of course, is a very well-known stock. Lots of things going on with the company with AI and chips and things like that. So in short, with all the news surrounding the stock, we're likely to get a lot of movement, and that's what we've typically been seeing. So I like to focus on stocks, if I can, that have some things going on that are causing them to move, or if it's a stock that just has historically a lot of price movement that tends to occur. NVIDIA has both. So therefore, this is always a regular stock that we watch every single day to see if it's presenting any opportunities. Today clearly was not that day, but you can still see that pattern, which we saw in the QQQ, where we traded down to some previous closes in this case, only to rebound back up to today's open. This is a very common thing you're going to see in the markets, where when you have substantial movement, the tendency is for it to go, if there are any prices in the neighborhood, back to previous closes or previous opens. Again, those are the most important prices of the day. That's where most of the volume is concentrated. So those are the main reasons why those prices tend to play over and over again. All right, AMD. Now, if you guys remember, let's take a look at a longer term chart of AMD. Okay, so let's look at it on a weekly basis. So AMD, when we were in the earlier part of last year, 2024, AMD peaked out. And then look at this decline. So we went from about 226 all the way down to about $76. Now, I remember a lot of people who got caught on the bullish side of this trade way up here and kept adding and adding and adding to this, to the point where they lost a ton of money. This stock really did disappoint a lot of people on its move to the downside, I have to say. And it's only after this big decline that we finally saw a big rebound. And then after the last earnings, et cetera, we've seen the stock price rise dramatically. So We're seeing a lot bigger ranges. So AMD typically shows up on the radar on a daily basis as something that might be an opportunity. Not every single day, but most days it does. So we're going to keep an eye on it. But today, of course, once again, choppy day. As I scrunch this chart together, you can see there weren't really any levels nearby. If you look down below, these levels at the bottom, they're pretty far down. So it wouldn't be rational for me to think that the market's going to sell off all the way down to here unless there's some really, really bad news. And there really isn't any news that's really bad for the company. It's all good. Also, remember that we've gapped higher. So that's also influencing the fact that the stock is up so far. So you can look at this movement over here. This is from October the 14th. You had a really nice move up, and then we went flat after that. Okay. Right off of these previous levels. And before that, we had some other days that I remember were pretty strong. This one was not so strong, but this one yesterday definitely was. So great opportunity here. Fantastic opportunity to take some trades. And I'll go over some specific things of what we did. And then today we've just been neutral, hanging around where we were yesterday. Okay. So AMD, I would definitely keep on the radar. And then finally, AEO, which I started to allude to. AEO, in my opinion, definitely is in the meme stock territory. In short, AEO, is American Eagle Outfitters, and there's a lot of people who are betting against it. That's what I meant to say instead of Arista earlier. There are a lot of people betting against AEO, and there are a lot of people that are very bullish for it. So AEO as a stock is basically something that we can expect will have some substantial price movement. So if we look back in time over weeks, you can see these big swinging moves, right? So this is common for the stock. So therefore, when it gets on a move, it tends to last for a while. So we have these really nice swings up, these really nice swings down. This one kind of was shortened, but nice swing up, nice swing down. Then we had a big pump here. I only think because of this tariff news that we actually got derailed. If it weren't for that, I don't think we would have come down nearly as much. So that kind of interfered with it, but you never know. Most likely we're going to still see some potential movement. I wouldn't expect there to be massive downside, but at the same time, we have to keep an eye on everything. So for now, all we have to know is that this will probably move. So today, just like most other stocks, not really doing anything. It started off the day pointing downwards, but quickly ended. And now we've been neutral for the rest of the day. So looks more like this will attempt to go back to previous levels above. It did have a chance down here to keep selling off, and it didn't. So that implies to me that this was the final gasp of the sellers, and then we probably will see some rebounding after that. Okay. Okay. Before I forget to mention, when we get to the wheel today, you'll be entered into the Las Vegas wheel. Okay, so this will be a very special one. So there will be a winner eventually who will be getting a free trip to our Vegas event. So make sure you stick around for that. Okay. All right. So folks, these are the stocks I'm watching, but how about trading them? How about trading them? What can we do? All right. Well, one of the things that I like to do in the room is to help people to recognize. I have a coaching room that I do for the proprietary traders that I'm training. And they're all trading, of course, intraday on stocks or stock options. And what we like to do, right? What we like to do is figure out how can we more effectively recognize an opportunity to enter a trade. Now, I'm of the opinion that your best bet is to focus your attention on the chart itself. I'll be in Vegas. Yes, I will. I will be there. I already got my tickets. So I want to make sure that my primary focus is on the chart and what the price bars are doing. And why? Because at the end of the day, the price bars are what make us money, right? What the price of the stock actually does is what makes us the money. So if I have indicators on my chart, doesn't matter what indicators I put on. If the indicator says buy and the stock keeps going down after I buy, doesn't matter what the indicator says because the indicator doesn't make me the money. The price movement does. So it's very important for us to focus the majority of our attention on what the actual price is doing, how it's actually behaving. Now, what that means is we're going to look at price action. We're going to look at price behavior. Now, I'm of the opinion that the cleaner and clearer the price looks, the better. In other words, if you slap something on a chart that looks like a lot of stocks look today, right? So here's the action for AEO today. Nothing remarkable. So if I slap on here a bunch of indicators, a bunch of studies, they're not going to tell me much because the stock's not really doing anything. It's just drifting around. So putting that on this chart, I might think that that's going to clarify everything for me, but it's not. It's just going to reflect what's already there. In other words, the only way I'm really going to make any money is if the stock is behaving in a reliable fashion. There's got to be something that keeps repeating itself. Either it's a persistent trend or something else. But I look for trends because the more the stock moves, the more potential money I can make. That's a given, right? If I'm looking at any situation where I'm buying or short selling stock, the more it moves, the better it is for me, right? So I want to find movement. I want to find things, as we say, that are in play, that there's something driving their price more so than what we would see normally. So what we use in the room, in my coaching room, to help us to recognize opportunities is not required, but something that can help people to get better at recognizing opportunities are called Heikin-Ashi bars. I'm going to show you an example of this today. I'm going to show you two examples. We're first going to look at AEO, which is going clearly sideways, and then we're going to look at something else. But let me just show you what I'm referring to first. Okay, so Heikin-Ashi bars, that's how someone who was Japanese told me that's how you pronounce it. So I'm going to take their word on it. So Heikin-Ashi bars, some people call them Heikin-Ashis. When you look at this chart, this movement on the left and this movement on the right is what I actually want. Now, what do I mean by that? So what a Heikin-Ashi bar is, it's an averaging of two price bars. It takes, so whatever time setting the chart is on, it's averaging the last two bars. So if you have a 1 minute chart, it's averaging the last two 1 minute bars. If you have a 5 minute chart, it's averaging the last two 5 minute bars. Now the formula is complicated, but the result is easy to understand. The result is I look at the chart, and if I see a body that only has a tail on one side, that means I have a strong momentum. If I see a body that has tails on both sides, lines on either side, that means I don't. And it is a W. You're correct. That is what you're seeing exactly. Now, I'm not a big W pattern person. I don't trade that, but I know a lot of people who do, right? So with that being said, I guess the word of the day is pattern, right? So what I'm looking for here is a pattern, okay? I want to see persistent bars that are pointing downwards, okay? Oh, sorry. There, I brought it up. Thank you. So the word of the day is pattern. Yep. All right. So apparently, so this is going down, right? We have the upper shadow, right? There's no upper shadow. And this is going up. We have no lower shadow. Okay. 1 second. 1 second. So if it has any shadow, right, it just means that you're having a little bit of consolidation, right? So what I look for, if I can find it, is movement down. You have a bit of a pause, and then you start to resume. Or movement up, you have a bit of a pause, and you start to go up. That doesn't really happen here. This is actually just a reversal. But in general, what I want to see is the stock goes down, let's say, pauses for a second, then continues to go down, or stock goes up, pauses for a second, and continues to go up. That's the setup I'm looking for. The only setup I'm really looking for. Okay. Now, having said that, okay, let's look at some real examples of this. So I'm going to show you two charts. One, we're going to start with AEO. I'm just going to turn on the Heikin-Ashi bars. And if I look at the chart, this looks like something's going on. Remember, these bars are deceptive because they're averaging 2 bars. So if I turn it off, there's an actual gap here, right? There's a gap between where my cursor is there and where we open here. But when you look at these bars, it looks like there's no gap. That's a deception. That's one of the things that you have to know about these bars. But at first we're going down, right? Then we're going up, and then it gets into this chop. What I define as chop is when you don't have persistent green or red. You just have green to red, the green to red, the green to red. You have a lot of candles that have wicks, tails on both sides. So when you have that, if you trade during a period like this, it doesn't matter what these bars tell you. You're not really going to be able to persistently make money off of that. Now, in this case, it did swing wide enough where you probably could, but in most cases, it's going to be so inconsistent that you won't. In other words, yes, I can find times to sell. I can say, okay, it went from green to red. Okay, I sell. It went from green to red. Okay, I sell. Sure, I could do that. I could say as long as it's up, I can sell. But eventually what I'm going to find out over time is this is not a very effective way of trading. It's a lot of work for less than significant gains. It's like you're going to have a lot more losses than you should. You're going to have a lot more false starts than you should. So why waste time on that? But if the stock is doing what it's supposed to be doing, and again, we have to look for a stock that's moving first, right? Then we go from there. I'm going to spin the wheel of names in a second, folks, once we get to the end, okay? So let's look at a different stock. Yes, it wears you out. It just gets to a point where it's like enough already. But let's look at a different stock. Let's look at IONQ today. This was actually one of the opportunities we traded in the room. Okay, so the prop traders in the room, this was one of the opportunities that I identified, and we actually did see it go down quite a bit. We also had a downside target as well. So it's not just movement. We also have projections of where the stock price is expected to go. That's a critical part of what we do here. Now, having said that, if you look at this example, okay, whether I have these bars on or I have regular candlesticks or whatever I choose, I don't have to guess at what's happening here. That's today's open at the top. And this is the bars going down, 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 down. So because I can see a strong projection downwards right from the start, I don't have to guess at whether or not this stock looks like it wants to go down. So it doesn't matter the indicators I have on. If I turn all of my indicators off, every one of them off, I'll leave the volume at the bottom. This is the start of the day, and I can see clearly this is going down. That's all I need to know. Now, I can put other things on my chart to confirm the trend, but the trend's already there. The only question is, how far can I project that it could possibly go? Now, in the coaching program, in the room, I actually give out information to help people to figure that out. I've already given you one set of data that we can use, previous opens or closes. If they're within the neighborhood, those can be used very effectively to project where a stock might go. So we can use that as a way to gauge what our risk to reward is if we get into a trade. But if I turn on the Heikin-Ashi bars to make it easier for me to see, here's all I'm really looking for. And let me turn on the studies again so we have them all. Here's what I'm looking for. I have a move down, red, 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 red. I have a pause, green, green. And I have a resumption, red. That's it. All I'm looking for is something that starts off strong, takes a breather, and then starts to get back to work, like it took a lunch break. So once I see that, that is my setup. This is what we literally do every day in the coaching program. This is what I look for. Now, you can trade whatever you want. You're not required, if you're trading with Funder, my company, you're not required to trade in any particular manner. There's some rules and guidelines you have to follow, of course, but within those boundaries, you can do pretty much whatever you want. So if you want to trade the opposite direction of this trend, you could. Wouldn't be a good idea, but you could. But of course, the smarter idea would be to take advantage of the momentum, right? Because if it moves and moves and moves, you make a lot more money in the downward direction than you would likely make in the upward, right? If I'm trying to scalp the lows to get these little bounces up, I might make some money, but I got a lot more movement in the other direction. So why would I grab the pennies when I've got dollars sitting there, right? So then after that, it comes up. It does a nice smooth turn up to the VWAP, the dark purple line here. And after cruising along there for a bit, it starts to resume its movement down. So by the time you get to over here or so, you can see what looks like a resumption of the move down, right? So there you go, right? All this stuff that I'm showing you, you can do. Now, folks, I just wanted to give you a quick overview of this because I want to make sure you're clear about what it is we look for, okay? There's obviously a lot more I can add, but you can see you have a move down, a pause, a move down, a pause, move down, a pause, another move down, a pause, another move down, another move down, and eventually starts to lose momentum. But obviously, if you are watching this in real time like we were, this makes a lot more sense. So I don't think it works in any time frame, Lita, because I'm only trading intraday. So I'm going to look at a smaller time frame chart. The actual time frame I looked at is usually a 30-second chart when we do the intraday stuff. I was just showing you a 1 minute, but either way, if there's a good trend, it should work no matter what, right? So in other words, if I use 30 seconds or a minute, I should still see some trades. All right. Now, folks, this is pretty straightforward stuff. The key is to identify a stock that has strong momentum early, right? And then we jump on it. Now, I do have to stay on time here, right? We have to pay into the, I'm not sure what that means. But these charts, this type of chart is available on most platforms. So you should be able to get that on almost every platform, if that's what you're asking. All right, I do need to wrap up here. So let me get back to, I always like to teach, but let me jump back to what we're talking about here. So let's talk about prop trading really quickly here. I have a webinar coming up, okay? Please be sure to check out that webinar. That's where you're going to learn a lot more about what we do. We just posted the link in the chat, okay? So it's pinned in the chat. Just make sure you check that out. app.fundertrading.com, Mike Patton Live Training Funder. Please be sure to join me today. That'll be at 8 o'clock Eastern. I'll be going over a lot more about what we do as proprietary traders, what works for you, how it's going to help you. But basically what you see on the screen is what you're going to get. The biggest thing is you're going to get access to firm capital without you having to risk your own money. Okay, you have profit potential that's greatly increased because you have vastly more money that we're providing for you to trade with. So as a prop trader, if I'm looking at an opportunity, right, like the one I just showed you for IO and Q, right? If I'm trading a much larger account, you know, if I've got a $250,000, $500,000 account or more, I can do a lot more with this price move than I could with a smaller account. No matter how we cut it, you make a lot more money with bigger money. So if I want to make $1,000 in a day or $5,000 in a day, if I have a lot more capital, those are numbers that I can reach. And these are not pie in the sky. It's not abnormal for a prop trader to be averaging $1,000 to $2,000 a day. It's not abnormal at all. Okay. You will also see prop traders that are averaging $10,000 to $100,000 a day. And that's fact. So the point is, most of us, we have a scale in our mind that's smaller than what the actual pie is. I'll throw this stat at you. I think the highest paid athlete in the world, professional right now, is making $200 million a year. There are hedge fund managers that were making $1 to $2 billion a year 20 years ago. And of course, they can make a lot more now. My point is, If you think the money in sports are big, the money in trading is vastly bigger. That's the reason why a prop firm makes so much sense, because all that separates you from being able to make much larger money versus smaller money is not simply your trading ability. If you learn how to trade, or if you can be taught how to trade, which I'm sure you can, now you can scale. And scaling up is what allows you to make a lot more money, right? We're also going to provide you trading platforms and market access, so you have all the tools required to be able to trade. It's all provided for you. We also help you to maintain your edge by helping you manage your risk, meaning that we set boundaries for how much you're allowed to lose in a day. This forces discipline and consistency so you can actually keep money, not just give it all back to the markets. A lot of people fail simply because they're depending on themselves alone to do it all. But when you have a team behind you and someone coaching you through, it makes it a lot more effective. Okay. And that's why I say we have mentorship and community, all these things, right? Absolutely, Edward. Be sure to jump in. I'd be glad to see you there. So the opportunity is very simple, right? You get access to $250,000 of capital to start. Once you join our program and you pass our funding challenge, which is basically like a driver's test, we coach you through it, of course, to make sure you can pass. Once you pass that, we start you off with $250,000 in funding, and then we can scale up from there. Okay. So in the webinar that I'm going to have tonight, I'm going to go over how this all works. So that way you'll be able to know how you can get started with us for stocks or options traders. Only for stocks or options, by the way, not crypto or Forex. And then we can show you how in as little as 12 trading days, you could become funded in trading with $250,000 in capital. So folks, I got to wrap this up here because I see the clock is ticking and the timer is saying my time's up. But make sure you join that webinar. That link again, if you guys, if the team, if you could repost that one more time, it is, it's the link for app.fundertrading, Mike Patton. Just go ahead and jump on there and you'll be good to go. Okay. All right. Thank you. Other than that, folks, have a great rest of your trading day. I really appreciate your time. Looking forward to seeing everyone this evening at 8 o'clock Eastern, and we'll check things out from there. Okay. Oh, I got to spin the wheel. Sorry. Got to spin the wheel. Hold on for 1 second. Almost forgot. So let's see who's the winner.